Hello, welcome, and once again, thanks for watching and following me. My name is Joseph Areu, your investment advisor on matters passive investing. I am looking forward to each of you watching having a financially independent life in the long term and minimizing on the potential for financial delinquency. This is what the objective of this series of talks is about. Ladies and gentlemen, in this video, I want to talk about uh, mergers and acquisitions, some people would call them, and what that implies to you as a potential investor. So, this is a situation or a transaction where one company acquires, purchases, or buys out um, another company, basically buys out the stake, either the entire stake or a controlling stake. When I say stake, I mean the shareholding of another company. In other words, there's basically a change of ownership. And I want to give you some tips or insights about what does that mean for you as an investor if you're currently holding shares in a company being acquired or a company which is acquiring another company. What does that mean for your the value of your shares? So in Nairobi, in the last few months, let's say in the last 1 year, for instance, the NCBA Bank, there has been talk about the NCBA Bank being acquired by another bank, Stanbic Bank. I don't think to my knowledge, I don't think the transaction has gone through yet, but there's been a lot of talk about that. And that caused ripples in the market, in the share pricing. As I speak to you, there is the East African Breweries Limited, which reportedly is being acquired, at least the majority shareholding is being acquired by some Japanese company from the current shareholder or majority shareholder, Diageo. Right. The question is, what does that mean for you if you are currently invested in those companies or if you want to buy shares in those companies? So the basic thing, without we don't have time to go into detail, basic thing to understand is that the market always has certain perceptions about such a transaction in terms of the share price after the transaction. So the market tends to, so I'm talking about companies which are listed, by the way, public listing. So the market always expects that the company being acquired, or let's say the company which is acquiring, the company which is buying shares in the acquired company tends to overpay, if I may put it that way. It's probably going to pay more than the book value or than even the current price of the shares of that company. Okay, so when before the news of NCBA potential M&A transaction came, it was probably trading at around uh, 30, 40 Kenya shillings per share. As soon as that news hit the airwaves, the price just took off. It at some point was 80, 90 or thereabouts. Why? Because the market expects that the company which is buying out this one being acquired tends to pay more than the current price. So you could see everyone rushing, trying to um, buy shares in that company in expectation of an appreciation of the value of those shares at the end of the transaction. So that tends to be the dynamic. Well, it's up to you who is holding shares in that company then to decide, do you want to sell as the price goes up? Or do you want to hold on depending on your objectives, like the time horizon of your objectives or investment objective in that company? If you have a long-term horizon, well, then you might want to stay in there. But if you want to basically make some money, well, it might be time for you to consider exiting, because then you are going to make a quick profit. Okay? If, on the other hand, you have shares in the company which is acquiring, the one which is buying shares, so in the case of NCBA Bank, I think it was Stanbic Bank. In the case of Diageo or East African Breweries, it's a Japanese company. So if you happen to be holding shares in the company which is buying, well, the expectation is that the price is going to drop a little. It's likely to drop again because the market perceives that that company is probably paying more than the current price or than book value. But that tends to be just for some time, and then it might correct in the long term. So again, you might want to decide whether you want to sell or you want to buy. But I'm just trying to give you some tips in terms of the expectations, what you should expect when there is an M&A, mergers and acquisition transaction going on in the company in which you might hold shares. Thank you very much. Please do let me know if you want some further clarity. In any case, please remember to subscribe, share my videos, and or like. Thank you very much for listening or watching.